The latest controversy on social media and all over the financial news is what's been happening with GameStop. What is with the sudden mass of buying GameStop stock, and why does this have their prices soaring? Hi, my name is Darius, a senior investment advisor with Noor Private Wealth. If you are new to my channel, we focus on helping clients build wealth in the most tax efficient way, so let's jump right in. Today we're going to discuss the crazy GameStop frenzy that has so many people talking. If you haven't heard the latest news rapidly spreading about GameStop, here's a quick rundown for you. GameStop is an electronics and video game retailer with over 5,500 locations worldwide. Their success has rapidly been declining over the last few years with the demise of brick and mortar, and their revenues have continued to fall. By next year, they're expected to lose over $100 million, making them an obvious target to what we call short sellers right now. Short selling means that the investors will profit if the value of the asset falls, so they ultimately bet against stocks. The biggest short sellers are usually hedge funds and institutional investors, as they have more capacity than retail investors do. Short sellers tend to benefit from the misery of falling companies. They borrow and sell the stock today to then buy it back later to replace the borrowed share, hoping that the price falls so that the buyback can be done at a lower price. In GameStop's case, over 138% of their stock was being shorted. This means they had more short demand than actual stocks, and people started exploiting this on Wall Street Bets. Wall Street Bets is a community forum that revolves around the stock market. A lot of people are there just to share memes and make jokes about people who lose their life savings on stupid moves. Recently, GameStop has become the target of their discussion because short demand for stock means short squeezing might happen. Short squeezing is when the short sellers have to eventually buy back their stock at a higher price to replace the stock that they originally borrowed and may have to close their positions early. Doing this, they're actually losing money instead of making money. With GameStop, they saw an opportunity to get back at the bigger players like the institutional investors for always preying on vulnerable companies. People are voicing their anger towards Wall Street and financial institutions that are or have been involved in market manipulation. Of course, market manipulation isn't new to the game. Institutions do it regularly. So why does all this matter now? Short sellers are hurting, yes, but people need to remember that there's institutional money on both sides of this bet, and the high percentage of the market volatility is most likely stemming from institutional algorithm trades and high-frequency trader tools. These are computer systems that systematically do the trading on behalf of people. They act faster than any person could and are quick to pick up and amplify trends, in turn leading to more algorithms joining in. While we don't know specifically how much of GameStop's stock price has resulted from high-frequency traders, I believe that institutions are still benefiting from this, even with the hedge funds that are making a killing themselves. Nasdaq has reported that 111% of GameStop's tradable shares are owned by institutional investors. The individual investors, the retail money from Wall Street Bets, may have started GameStop's rally, but what really pushed it to where it is today is all of the short sellers trying to frantically buy back their stocks before prices rise. This in itself makes the prices rise, which makes the institutional investors jump in and buy shares, bringing the shares up to where they are today. The institutional investors are pointing their finger at the individual retail investors that started this trend, saying that it's their fault that this manipulation of stocks has occurred. Yet they have no problem joining in and reaping the benefits, causing the stocks to soar to record prices. It's most likely that one trade from one institutional investor would probably outweigh all of the trades from the individual investors, So pointing fingers at the Wall Street bets traders seems hypocritical. One way or another, it's a gamble with GameStop right now. Even though many people have made a lot of money in the short term on this, it's impossible to know what the near future could bring. Stocks could continue to dramatically rise or they could completely crash hard. But one thing is certain, wealth is not built overnight. Not one of my clients won the lottery or the casino. They built their wealth focusing on strong fundamentals and applying discipline over the years. So to all the GameStop investors, I raise my glass and wish you good luck. We will continue building wealth in the meantime. That's it for today's video. I hope you found it valuable, and if you haven't done that already, make sure to hit the like button, and if you want to see more, don't forget to subscribe. If you have any questions or comments, please let me know below. I read and reply to every single one. Thank you very much for watching, and I will see you next time.